So today's conversation is not simply about collecting art.
Man is only half himself. The other half is his expression. So I believe for humanity it is necessary.
It's not only a social investment when you're investing in art, it's more of a civilizational investment.
Are these novelties or are these the future infrastructure of the secondary market?
I think it will become part of the infrastructure.
You have very little control over your secondary market future.
Are collectors really just custodians of something much more important?
You're making a mark upon where you feel like your culture should be placing its value.
Value itself is ultimately a social thing. It's about belief. Welcome to Wealth Office X. This is a series built around exchange, bringing two expert perspectives into the same conversation to explore a subject in the round, particularly where power, risk, and long-term consequence intersect. Today's subject is the secondary art market, where increasingly some collectors are returning to an older model of patronage, not simply buying works that they like, but actively underwriting the existence of an artist, supporting them financially over long periods of time, accumulating large portions of their work, building networks of other collectors around them, and engaging in maneuvers that help to establish the secondary market, which ultimately determines both cultural significance and financial value. On the other side of the coin, some collectors approach art very differently, treating it primarily as an asset class, allocating portions of their portfolio into blue chip works as a store of value, even borrowing against them, sometimes with little emotional connection to the work itself. And perhaps that's what makes the secondary art market so fascinating, because increasingly the secondary art market is functioning not merely as a marketplace for collectors, but almost as a shadow banking and legitimacy system for global wealth. Artworks are now used not only as objects of taste, but as collateral, estate planning, treasury assets, investments, philanthropic vehicles, and increasingly as components within broader wealth infrastructure. Freeman and Bigna Pfenninger are two of the world's leading authorities on the secondary art market, advising collectors operating at the intersection of art, wealth, reputation, influence, and power. So today's conversation is not simply about collecting art. It's about the intersection of culture, speculation, patronage, wealth preservation, reputation, and belief, and how financial value is ultimately created, sustained, and managed. Catherine Bigna, welcome to Wealth Office X. Let's start with something really basic. If you had to explain the secondary art market to somebody, how would you explain it? What is it and what do people misunderstand?
In effect, it's quite simple. It is secondary, it's second-hand. It means it concerns all the works which are not coming straight from the artist, from the studio, or via dealer for the first ownership. They're all the works that have been owned by different people before, have been sold and resold. It might concern centuries, or it might concern just 2 years. One of the misconceptions is the natural association is that people often feel it must be a dead artist for the secondary market to be applying, but it's not true. A living artist may very well already have a secondary market and should actually be trying to develop so.
To some people from the outside, the art market in general, but in particular the secondary art market, might appear more like a social system than perhaps a market in the sense of a financial market. It seems to be driven by different factors: reputation, belief, institutional credibility. In fact, doesn't the art market actually reveal in many ways something which is maybe uncomfortable about markets in general beyond art? And that's value itself is ultimately a social thing. It's about belief. Would you say that's the core ethos of the secondary market?
To begin with, there's really not one art market within the secondary world, you're talking about many systems within one, which depends on whether you're collecting ultra-contemporary or old masters or blue chip, impressionist works. So all of these systems are acting in different ways, but no more or no less irrationally than all the other parts of our financial system. I would say sometimes they're more often working in tandem than against. And it's not only a social investment when you're investing in art, it's more of a civilizational investment in that you're making a mark upon where you feel like your culture should be placing its value.
There's many artists that never develop a secondary market. So where's the hurdle? Where does it happen that an artist becomes commercial? And is that different depending on the type of art?
If you are a secondary artist within the contemporary world, you have very little control over your secondary market future. It's very much in the hands of your dealer and how they direct your market, how they place you in an institution, because after that first sale, you're at the whim of the institutions, the collectors, and the advertising that goes around the work that's already out of your control.
Can we look at that first sale? I mean, like many people who are probably watching this, I've bought artworks in the past purely for pleasure, and like many people, I will buy them thinking, well, there probably is no fund. I'll pay whatever the value is, but I probably won't get my money back here. This is for pleasure. But I think, like many people buying maybe an unknown artist, in the back of their mind, they're hoping, well, maybe one day this artist will ascend and it will become a well-known work and I'll create some value. So what's the breakthrough moment that creates a secondary market for an artist?
It's difficult to say. I don't think there's one linear way to have a secondary market, especially if we speak about the various segments. If you imagine a certain time period which has already gone by, so the breakthrough might be a certain accuracy in that artist having read his or her time. In the contemporary comment in an artist is in its moment, and what history afterwards does with that moment is not predictable in that sense. But yes, we do try to predict it. That is in the primary market. What many people try to read, to have the eye, that's what we call it. Do you have the eye? And to read, is what is being said on our today's moment so important that in 20 years that will stand out amongst the many, many, many? You usually end up having a period and you have the 5 big ones. No? You have the 5 big impressionists, which increase in value a lot more. Whether they be better artists than the other one that wasn't recognized, we don't know.
I want to dig into this notion of market making, especially in the secondary, a little bit more as we continue to talk. But maybe we can just, for a second, you can give me a couple of examples of what you've seen as very successful secondary market artists. Maybe if we focus on contemporary, where you've seen somebody ascend and become a successful secondary market artist and investment. I'd be interested in what you see as the key things those people did. But forgive me, I'm going to refer to my notes for this bit. So for example, if we look at the opposite end of this, so let's look at Damien Hirst. Damien Hirst had a 2008 Sotheby's exhibition. He bypassed the galleries directly. He created the art himself, had a huge auction at Sotheby's, generated $200 million in direct sales. But actually, the market for those artworks afterwards, I believe, slightly declined because there became a case of oversupply. So the auction was almost a case of hype that the market couldn't then sustain afterwards. Now, I would assume that's a case of not quite getting it right. Can you tell me some stories of artists who really get their secondary markets correct in terms of how they position themselves, or of course how their gallery or dealer positions them for that market?
Well, one that comes to mind precisely might be the most expensive living contemporary artist, which is Gerhard Richter. Has just had big show retrospectives around the world, has a very strong secondary market. It can be read in many different ways. There is a structure to his practice. There is a work, there's a recognizability. There are very distinct periods which might have different values. There is size, there is operation, is very operative in that sense. But to come back quickly to Damien Hirst, I think to outward understand also, we have sometimes romanticized images of artists and what they do. They have sizes of business, structures, how they run. And there's not so much difference in creative entrepreneurship as in creativity in the art world. So I think it is great to start doing it differently. Why not promote yourself? Why not a primary market artist go to the auction house and say, why don't you put my work up? We have a lot of canons with a lot of people who work in these industries, which give certain filtering systems we adhere to, institutionally, value making, etc. But there's always been, and time and again, people who go out and beyond it and try a different way. And in a democratizing moment, that might be the good thing to do.
Would you say it's fair to say that the primary market almost creates visibility, but the secondary market really is about legitimacy? And that's the hurdle that really defines an artist as potentially an investable asset, which they can then increase in value. And we're going to talk in this conversation about how that in many cases is then being financialized or even tokenized in some cases. How much legitimacy is created in that secondary market, but also how important are collectors in creating that legitimacy?
I think collectors are paramount in creating that legitimacy, in that they're choosing through the choice of works that they put their money and power, the power of the money behind, in the objects that are much more likely to be valued higher in the future. When you choose A over B, and that piece then is placed into a museum, it's placed in a private collection. It becomes part of a collection that is known worldwide and is then sold at auction collectively. It has much more cachet than a piece that you just choose randomly and have not created a story around your collection.
There's an assumption maybe in some of what I've talked to you about so far, which is about the dynamic of the secondary market being essentially one of shopping. So there are buyers and sellers swapping works at different times depending on circumstances and value, which is no different, say, to the property market, one could say, where there's an element of speculation. But there's something that I spoke to you about before we started filming, when we were planning this discussion, and it was this notion of potentially collectors becoming more like patrons in the future. So, historically, some of the most influential collectors weren't just buying finished works, they were actually underwriting the artist themselves. In some cases, paying for that artist to exist, for them to eat and for them to live and for them to exist, buying up a proportion of their works, but actually working in tandem with those artists to then build a secondary market, which then creates value in the portfolio that's been accrued. I think perhaps most famously, we're sat here in London today, Charles Saatchi, the advertising magnate, focused his collection a lot on young British artists, obviously built a huge portfolio himself, but actually by concentrating his focus on those artists, he amplified their media visibility, he manufactured their institutional momentum. Saatchi wasn't just buying art, was he? He was actually building a cultural movement, which then created significant value for those artists, but also significant value for his own collection. Now, at the time, that seemed very clever and quite innovative. One could argue that actually is just a return to history. But given the more democratized world we live in, especially now for media, for example, is that something you could see collectors turning to increasingly? Is this idea of becoming patrons rather than just buyers and collectors? And have you got any examples of that?
There is, depending on the markets, there is always this moment of patronage. And I think what you highlighted in Saatchi, for example, I would also advise someone starting out to do. There is a certain amount of pragmatism in building, a certain amount of reality. You should start out where you are close, because it is an enormous amount of knowledge, and you should meet the artist, and you should meet the dealers, and you should meet the infrastructure. So it would be rather silly for Saatchi to I'm going to start out South Korean art. Why? So it is really, the art markets have very much depend, in wherever they are, on really strong ecosystems of everything of the art market existing, of the schools, of the dealers, of a certain museum landscape. It's in those moments, it's not just if a place only has the financial capacity. We have tried, a current example, Singapore, has all the transactional modalities, everything is there, could be a wonderful, wonderful secondary marketplace. We need to build still a certain appetite, an ecosystem of artists visiting studios. It only works when it all comes together.
So you couldn't have somebody who had significant resource just enter the market and try and become a market maker. You're saying that connectivity remains essential, unless maybe you are an advertising guru like Saatchi. But even then, there was as I say, it was a movement, wasn't it? It wasn't just a financial dynamic that he was actually building. What does sophisticated patronage actually look like? So I'm hearing what you're saying, that really to become a patron, you probably need to already be a collector, I think is what is underlying what you're saying there. But if a collector wants to become a patron, what does that actually look like if we're trying to be sophisticated? So if a collector is trying to become a patron of artists to elevate that artist, but also to generate value in their collection, what are the best practices based on your experience and what you do?
I believe one of the best practices is a certain giving leeway. I think one should understand that as a collector, you're becoming a patron of an artist in their right, rather than being too predictive. Mm-hmm. I think it might not have so much, from a cultural viewpoint, you have to make similar decisions. Is it, like in anything, would you like to give a lot of finance, a lot of freedom, and see where it goes? Where are you going to support which institutions? You have to know a lot about the institutional landscape in order to organize this correctly. Mm-hmm. And I think nowadays particularly, we're very interested in young collectors. Yeah. It's very important how people interact with each other. I do not believe that nowadays it's possible to do a lone game, mm-hmm, unless you're starting with a big conglomerate.
Do you think that the changing democratized media world is changing that a little bit? We had we did an episode of Wealth Office with Pearl Lam, who's a very preeminent contemporary art dealer, and one of the things we talked about a little bit was that there are now emerging contemporary artists who have significant markets who've actually bypassed all of the traditional institutional infrastructure. There's one artist we talked about who essentially went viral on Instagram and became discovered and is now incredibly commercial and incredibly popular around the world. And is that a good thing or is that a bad thing? Because it's notoriously hard, if we talk about the contemporary space, for an artist to become commercial, to have a secondary market. How do you see that dynamic playing out? Will the institutional infrastructure always be absolutely key, or is there a chance that the market could become more democratized, as they might say?
I think if you look in history, there's always been amongst certain human individuals the desire to collect. I don't think that's going to change, although the manner of collecting could very well change. As in Bigna was saying about the young collectors, they have a different modality. They want to be part of experiences. They want to have technology be part of what they're doing. And I think their manner of collecting will be reflected in those avenues. And part of this might be that they fractionalize pieces or that they share experiences around their collection, as in traveling to see the artist, and there might even be a form of joint patronage, mm-hmm, or really exploiting in a good way that the tastemakers, and the way you bring more value to your artist as a tastemaker is to bring more of your circle in to be also supporting what you support, and you're setting a standard with your taste and your choice of artists that you're going to be a patron of, and using all the social media channels that we now have at our disposition, it can be a huge boost for that artist. And it's not just the act of collecting, it's a more of a comprehensive support system.
In many ways, it's belief in the traditional sense of the secondary art market, but increasingly through movements where you have potentially huge online audiences who can become your fans, your champions, your followers. That wouldn't have existed 20 or 30 years ago. Does that have any significant impact right now on, let's call it the financials of the secondary art market? Does a big online following make any difference at this moment in time to the valuations of works? I suspect no.
No, I don't think
Will
so.
that change?
I think a very good parallel might be the Spotify moment in the music industry. We had it in the film industry, it became Netflix. You had the music industry, the producers, the filtering system left, the Spotify. You can go out there. I think maybe if we do the step towards what is a financialized art market, I do not believe yet that this mode has entered in that sense. It's much more complicated. We're speaking about higher value works where participatory ownership or joint ownership does need quite an infrastructure and a lot of knowledge. So I think I love the trajectory towards that because I was always an advocate of transparency and market growth and new markets and participation, but it does need, it's not the application yet.
So fundamentally, it's still the collectors and the institutions who are doing the markets making in the secondary markets, with potential long-term changes. But as of now, it's still collectors, it's institutional credibility. That's really what the secondary market is currently built on. There's a question I think we should have almost started with at the beginning. If you've ever been, for example, to Pompeii, just outside Naples, you can walk around the remains of the 2,000-year-old Roman city, and you can see the pots, and you can see the houses, and you can see where people lived. You can even see the tracks of the carts that have been worn into the road. But actually, what really resonates is the art that you see on the walls, because that's almost there. It's an expression of humanity 2,000 years ago. It says more, we were here, we existed, we enjoyed the beauty of the world. It says it more than anything practical ever can. What really is the purpose of art? Because we're going to talk a lot more about the market and the financial dynamics of it and some of the really interesting evolving financial dynamics of that market. But what is the purpose? When we had Lady Linda Wong Davies on Wealth Office, she was talking about being a custodian of art for future generations because it's that expression of humanity. How do you both think about art? What is the core purpose of its existence?
Ralph Waldo Emerson had a quote and said, "Man is only half himself, the other half is his expression." And I think that comes very, very close in for why art is made and comes there to be. I think societally it is extremely important. There, I'm an advocate of it being a necessity. As you see, in very moments of deep hardship, of survival, you do have very many facts that if you do not have some poetry in your head, you might not make it. And if you do have some poetry in your head, you might make it.
Yes.
I think it is interesting to, in moments of warfare, apologies for having such extreme scope, but usually what is being destroyed are artworks, like architecture, which give a cultural identity, which build people together in order to destroy it and to lose that kind of cohesive structure. So I believe for humanity it is necessary.
If you just expanding on that, if you think, for example, about when the Notre Dame Cathedral burned down in Paris, there was almost a national mourning, certainly in France and across a lot of Europe. And actually that mourning wasn't about the loss of architecture, it was almost the loss of the cultural memory that it's represented. It's something that goes deeper, I think, in all of us, which really returns to my core point here, which is, are collectors really just custodians of something much more important? That in a lifetime you can build collections, you can speculate, you can buy, you can sell, you can patronize, but actually is there a deeper social purpose to people who are building these collections, which is preserving that little piece of humanity?
I believe so. I believe so very strongly, because if we look at it from this moment where the market is highly financialized, we fall into a different paradigm of thinking, which in my eyes is very valuable, and there it is also a preservative moment. But in the beginning you might say what is read as irrational, as you mentioned, it might be read as more not so measurable, but I think that comes from the intrinsic value of it. If you do look at it as a currency, I mean, my belief and your belief in that 20-pound note needs to be intact, otherwise I'm giving you nothing. And
Exactly.
same with the gold bar, same with something else. Whether that's rational or irrational, I don't know. But I believe in the form of art that is already expressed, and that could be music, it can be theater, and not only speaking, painting. That is a huge currency. That is a lot of human thought captured and maybe maintained or not. So I think in the best of perspective, there are deep choices made of what to keep and what to preserve.
You know, we touched a little earlier on Damien Hirst. I remember very clearly when I was in my very, very early 20s, one of my early trips to London before I lived in London, I think I saw the Damien Hirst retrospective, which I think was at Tate's Modern. And as a young 20-something, I remember seeing that exhibition and thinking, you know what, if he can get away with this, then literally you can do anything. The entire world is there to play for. And I think art does that better than film, better than music. It goes much deeper in many ways. But anyway, I'm going to move us on a little bit. I want to talk a little bit more about the actual mechanics of the art market. I'm going to make a proposition to you both. So my proposition is this. My proposition is that Andy Warhol understood modern capitalism better than most economists. If you look at his approach to the market, where he knew to combine celebrity, repetition, he knew how to create a product that people wanted that was highly commercial. I'm interested in your view. What do you think?
Andy Warhol had the benefit of coming from a design and marketing background, so he knew the mechanics already, but I also feel he might have actually, I don't think it was pre-programmed, his success, but he hit upon a moment in time in which the mass production and the repetition, it just, and the humor that he put in with the Brillo boxes and the tomato soup cans, he made himself known, and then he kept replicating and writing quite well his fame. And it's something that's been copied by other artists, and it's become part of kind of the fun of buying secondary in some ways, that you're looking for certain things with certain artists that, you know, with like a Fontana, one color sells better than the other, or one slash or two slash, and it becomes almost like tradables, collectibles within the art market. So I do think it's, his way of creating art fits very well into a secondary art marketing platform.
I have one suggestion on top. I think the great success is that he wore it with a cool. Yeah. If you think about it, he had it sussed, and then he said nothing about anything. And maybe this is leads to the same way as you said, looking at Damien Hirst, I could do that, I could get away with it. So much plays in between the work and the artist and the perception. And Andy Warhol hit a very, very special time in that sense. It was the cool of not commenting upon it.
Yes, he just expressed through the artwork, and that was it, and then left it to interpretation, which created debate, which...
Being almost nobody, you're like, not much, give nothing of yourself, no, in person.
Yes.
It's very sterile.
It's very non-current in a world where we're always encouraged to share our immediate thoughts on our smartphone at the exact moment that we have them, actually. I think something that's very obvious, if for anybody who's familiar with the world of ultra high net worth art collectors, or even family offices who are increasingly investing in secondary market, often blue chip artworks as a portion of their collection, is that after a while the kind of materialistic aspect of consumption has no meaning, and it becomes more about purpose, essentially. What is it in your experience that separates, let's say, a sophisticated collection from a more superficial one?
I think the first step is very simple. I mostly experience that if someone is sure of their collection and has a meaning behind it, would like that collection to be accessible, not just to themselves. So it is about where do you bring it, what do you do with it, where do you rotate it, where do you lend it to and for which purpose. And invite is also the manner of in how you make it grow, not for simple accumulation. Growth can be a transformation. You get more thought from what you have done before based on the collection you have. And you change over your lifetime, and your interest shifts, and then it's most crucial of what you do with that. If you have given it so much meaning, where do you place your current meaning and the future meaning, and what you do with the rest in between? I think it's quite a kind of reflective process.
You're almost saying that a more sophisticated collection is one which is shared, perhaps, rather than something which is acquired and stored just for value purposes. I guess that sharing increases that institutional connectivity, the popularity of that particular artist, the people who've seen that work. So actually, it goes back to something you were saying earlier when I was suggesting somebody could create a market for an artist, but actually that connectivity with the ecosystem is also what marks a sophisticated collector versus a superficial collector who's maybe just buying as a store of value, essentially. How should collectors think about blue chip artworks versus emerging artists versus contemporary? Because as we alluded to at the very beginning, those things behave very differently. Very different financial profiles, very different risk profiles. One would imagine very different time horizons in terms of valuations or markets being created. So when you look at the people you deal with, what do you think a sophisticated collection typically looks like?
I believe there are amongst the segments different purposes, but the sophisticated collections, in my eyes, are the ones where the sum total is larger than its parts. So you might be following themes, interests, which you would like to allocate you find in a blue chip work, and it might be very much worthwhile acquiring that, showing or not showing, depending on the state of it. There's a lot of simple facts like air, damage, etc., that you can also be careful. And making a larger allocation financially in a piece that still supports your taste and what you want to say with art. Mm-hmm. It might fall into the blue chip segment. And then this is also something maybe for passing on to your children, more so than what is more current, more readily available. You might want to very simply place lesser money in where you are experimenting with your taste or what you're finding, or you're still looking into something. And we usually have a kind of, everybody, regardless on which level, you have a spending budget, and you have one where, like in real estate, would like to know where that area is developing the next 20 years. You're going to buy the chalet you like, but perhaps in a place that you know what's going to happen and what happened before. So it's just kind of a measure in between. I find the best, that might be very personal, I find the best overall collection where there is a sort of playfulness alongside the deep knowledge, because it has to have a vibe, no? It is not, it's like, usually you have other businesses at the same time, which require different parts of you. And if this part and you give a lot of time to it, and it's not your sole business that exists also, where really the collection is what you do, but I mean in an in-between way. It should be something where you can grow whilst you're doing it. So easy on yourself.
And having a few of those bedrock investment pieces, blue chip, within that collection gives you the steadiness to be able to be more playful, because those pieces have trackable, marketability over time. It's a very solid investment. We can see how it's moving. It's moved through history. And then knowing that you have those pieces that are accruing value and they're sort of like the gold bars in your safe, allow you to be a little more playful and build things on top that are, a little more contemporary, or artists that weren't as well known and haven't entered the blue chip segment, but maybe through the collection you're helping give it that pedigree.
How about the profile of a collective? We say we're talking about a sophisticated collector, and what I'm hearing from you is a sophisticated collector participates in the ecosystem, finds a way to showcase their artwork. It sounds like a sophisticated collector will have some blue chip to give that underlying safety, to create the room to then experiment with things which maybe have more uncertainty, more variance in what they might actually turn out to deliver eventually. If you think about let's think about the financial markets parallel. If somebody is very young and they start paying into their pension, bear with me on this because this is maybe not the most exciting parallel, but so the financial theory goes that if you're young investing in your pension, you should invest in very volatile, very high risk stocks because you have a very long time for those to pay off. How does that impact the demographics and the profile of a collector? So if somebody is a young collector, does it follow that they can take bigger risks versus somebody who maybe is later in life and perhaps doesn't want to take those risks? Or does it not matter if actually they have a passion? What's your experience?
My experience is that before I was so adamant about art being a necessity for humanity. I don't think collecting is a necessity. I really don't. I think if I'm responsible for a collection to advise that it doesn't go pear-shaped and the value remains and there's a succession, then yes, I can advise as to that, but you can also do something else with your money if you like. So yeah. I feel, yes, starting out, I think you should, the beauty here, as you say in the volatile, when you're starting out, you can give yourself a long learning curve. You'll be having fun on that learning curve.
I want to dig a little bit deeper into this notion of blue chip, because it's a phrase we keep using, and maybe we shouldn't assume knowledge, but maybe you can just define for our audience what you would define as a blue chip artwork. Maybe Catherine.
A blue chip artwork is one which has historically established itself as a, I mean, to use a financial word, it's a commodity. It has somewhat of a fixed value that it's no longer debatable, that this piece will carry some sort of value within that range. A blue chip art is, I would say, of 500,000 to, we're having work sell for, but just last week, 180 million. So these are the high value ticket items that are recognizable names that build part of anyone's sort of blue chip portfolio. You can rattle off the names of the artists that are there.
In the example that you just gave, so a sale for 180 million, how does that process work? I mean, you're both deeply embedded in this marketplace. So somebody has an artwork, they decide they want to liquidate it for whichever reason they might want to liquidate. How does that even begin to happen? Where do they go? What happens?
Well, I hope they come to us. No. Where do they go? It is usually, you have to sort of physically take the spectrum somewhere else. These artworks are mostly stored in Freeport storages, so they might not even change location. You have an entire financialized ecosystem also around Freeports where there's a transfer of ownership happening in that place, and it is so that you might, I'm giving a very banal example, that artwork might be held privately or it might be held in a company, which the company is only holding that artwork, so you can sell on the company, whatever your tax system or your situation is more favorable towards, what makes more sense, and depending which jurisdiction you are in, you might want to have private capital gains avoided, or you don't have them in other scenarios. So that is a quite a administrative, complex world where you say you do look at a certain global arbitrage, where something can go. They're the comments of, in the larger spectrum, when we read the market or where we're at, is significant. It's very difficult to transact with certain countries who have a large collectorship in those figures, and then for the historical context, it might just fall away for a minute, and then other destinations come up more strongly because transaction is possible, or possible in a different way. There is a lot of, in corporate ownership, there has many decision makers. Yeah. That is troubling because it takes a long time. But then it's very simple. A lot of the works at this caliber also, they are, even for large corporation, it moves the needle, and there are tax savings.
How does it work from people with your expertise and perspective? So what is the role and some of the value that you bring? And let me use another parallel to explain the point that I'm kind of getting at. If you look at the world of listed companies, so companies on stock markets, most significant listed company will have an investor relations head, and a lot of their role is a PR role. But one of the things that falls into that role is this notion that if a major shareholder, say a 5 or 10% shareholder, were to want to exit their shares, does that head of investor relations know exactly who will buy those shares almost overnight? So the shares don't go on the market, don't take the price down. They know all the time, I know where the buyers are who are interested in this category. Is that part of what you bring? So if somebody comes to you with an artwork which eventually is potentially worth 180 million US dollars, is it straightforward for you? Is there a short list of, I know exactly where we should go with this? Or does it go on to more of an open marketplace where buyers identify themselves? What's the dynamic?
Very closed, very quiet. Our market is before anyone is so at the point of giving it to auction, because that is a very risky position, at least from where we are coming from our business model for our clients, because that's an exposure and that can go wrong or it can go right. So the private market is very private. And yes, it is a global matchmaking. It is that moment you describe for the where you do advise and how to do it. It's a bit you do advise when you go for an IPO and when not. Is it ready? Is it not ready? Is it a good moment? And then, yes, it is being extremely quiet. I think a large part of our work is quietening down, making sure no one knows. That's the biggest art form. And only just the right person knows, because it's tight markets, thin air up there. It's not so many stakeholders in the entire market. For the largest trophy works, there are 2,500 works in the world. That is a scarcity market.
I guess in many ways that's why you tend to hear about major artwork transactions after they've happened. It's rare you hear that something has come onto the market, as they might say. It's actually a major contrast, isn't it, between primary and secondary market, where the primary is very much making noise and grabbing attention. It's interesting that once it becomes blue chip secondary, in a way, you don't want to be seen to be trying to sell or market a particular artwork, because that undermines the idea that it speaks for itself in terms of its valuation and being blue chip. Like, you shouldn't have to justify it in many ways. I suppose it's the same as if somebody gives you a dollar bill. You don't have to explain to somebody the value of a dollar bill. People should know intrinsically what that is, right?
Oh, there's still negotiations.
Well, yes.
But it's true what you say. It is still very, very largely extremely trust-based networks. We do have rules and regulations, heavy, and lawsuits threatened when you don't move the first step after the right step and the next one. So you need to know what you're doing. But it's a network of trusted colleagues.
I want to move us on a little bit. I want to make another proposition to you both, and maybe you can unpack it a little bit for me. So I've been thinking a lot about this notion of the financialisation of culture. And I'm going to use my notes again just to read this proposition off to you. So the modern art market increasingly resembles a parallel financial system. Collections are being integrated into treasury management, liquidity planning, estate structures, family governance. According to Deloitte and Art Tactic, the global art secured lending market could reach between 42 billion US dollars and 50 billion US dollars by 2027. Now, we've talked a bit about the meaning and the purpose and the beauty of art, but all of that suggests that it's no longer just a niche luxury category, but actually increasingly, certainly in the secondary market, when we talk about blue chips, it's increasingly a form of financial infrastructure in many ways, which is very different to the way I think a lot of people think about the art market. When did the market stop being just cultural and become financial infrastructure?
I think there might have been a step between. I feel there is still a very old guard around, if you want to stretch a time frame, that remembers, might not be active anymore, that remembers a much more cultural art market. In the beginning, even to late 90s, 2000, it might have changed, but I think the first was an industrialization rather than a financialization. There was a a market movement that was more structured, global, interconnected with real estate development, and the fair system, the gallery system became a lot more industrialized, and naturally after it becomes financialized. And I think it lies in the opportunity of much more transparent data. You cannot do it before you have the transparent data, so we really owe it to those who started collecting measurable data and putting trust
How
in
about that growth of lending against artwork? So we were talking earlier about a superficial collector versus a sophisticated collector. So if we allow me to draw another parallel, in the real estate world, most would say that it's not good strategy to own your real estate without leverage, because you can maximize your return by borrowing against your real estate, taking that borrowing forward and acquiring other things. So what is the dynamic? Why is lending against artwork grown so quickly? Is it because it's smart for collectors to leverage themselves? Or is it because institutions, for example, are in the market and apply that same methodology they would apply to, say, real estate to their artwork? Where is the boom in art lending coming from? What's driving it?
Well, I think coming off something Bigna said, a lot of it's coming from the now that we have all of the data collected around artwork, so we can read market reports over the history of where these values are going, which are often using auction data, but at least there's some sort of trajectory and historical reference to the actual values. It's not debatable. It's not, a subjective comment on how much it's worth. And once a bank has some sort of solid reference point for how much value anything is, whether it be your car, your house, or your boat, then you can use it as an instrument to have leverage against.
And so with the collectors that you deal with, is it now typical and routine to be leveraging against your collection?
I wouldn't say it's a initial impetus, as you described, that you would like that in order to be active. I don't think art still is not considered a very liquid asset. It's a value store, I think, for most of our clients. So, but it is a very comfortable value store. It is not pricey to store your art, and it's actually movable, which you don't have in real estate. So as an asset, you have a movable, low maintenance, low cost, storable asset. You might want to keep that and lend against it. Instead of, it's not so great to lend against a car that kind of, when you take it out every time you take it out the garage, the value drops because you hit the curve. So I think it is out of this notion of this being quite a guaranteed, not officially allowed to say that, but a guaranteed increase in value over the years, which is measurable. So it is more a reluctance to sell in order to have the liquidity. But of course, it's comfortable, and sometimes you need some liquidity on another end. So,
but does that liquidity, is it generally because somebody wants to take that liquidity and pay it forward into increasing their collection?
for example.
Or is it more just maximizing the return on a particular artwork by leveraging?
It's very difficult because this for me is so individual. It's case by case. It depends very much how in one family, mostly it is families, how it is allocated, who is collecting the art, who is doing the operative business, they're very personalized moments. I cannot tell you in one direction.
If somebody came to you both today, let's try a hypothetical. So if somebody came to you both and they were feeling very generous, let's say it's a tech titan who's done an IPO, and they say, you know what, I've been very focused on tech for the last 20 years, and now here's $1 billion. I want an investment grade collection. I know what I like when I see it, but I'm going to rely on you that I want a collection which I could hypothetically leverage, or I can store my wealth. What would that investment grade collection look like? If you had $1 billion right now, and what I assume would be an amazing commission for somebody to say, go and build that, where would you be looking? What would be the makeup of that collection? Would you agree, or is it almost a consensus in the market what that should look like?
1 billion. I would maybe recommend a longer time frame. 1 billion is very nice amount to allocate in a few real trophies. I mean, depending on the person, you can make their like almost sovereign fund acquisitions, which are businesses, these works, which they bring tourism to a certain point. They bring ticketing money. They bring, so that amount of money allows so much further than just a product that you might want to position yourself. You should definitely build a museum around it, and there is a long trajectory in that. It's not so easy to just allocate $1 billion into the right thing in 5 minutes. It's going to take some time.
How about Catherine? What would be some of the names you'd expect to be in that portfolio if you were looking at making acquisitions?
Well, I think it would first depend on that tech titan's taste, because you wouldn't want to go in just because things cost a certain threshold and could qualify as a sovereign fund purchase, and willy-nilly have a Rembrandt and a Richter. You're going to want to build for him something that suits his taste and his passions and can keep him. I assume that he's investing this in art as opposed to real estate because he has some sort of interest in furthering the civilizational memory around culture. So getting to know his taste would then build which group of blue chip, high worth artists suit his future legacy that he's going to create with his collection.
How about somebody who had no preference, who are very hyper-focused, not interested in the actual taste, and they're relying on you entirely?
You're looking for
if you had the full discretion and you didn't have to defer to taste.
Yes, I would buy a very substantial Modigliani. I would buy Nymphaeas from Monet, entire one, not a fragment. And I would also buy a good blue period Picasso.
How about you, Catherine?
Oh, those are very good choices.
How about contemporary? Would there be much contemporary in there? Would you be focusing again on those blue chips that we keep referring to?
Contemporary, I would really, there I find it even more difficult to say, I will go in for your taste. This is a bit like, I mean, shopping anything, very difficult. I would, of course, we can, some contemporary ones, if you want to go to this length, for example, you could reference, yes, to buy some Richters, because it has actually the same trajectory from landscape. He built it in a different way in his techniques, so that will mirror a certain trajectory where he goes along. If you ask me for my personal art taste, I would buy different things. I would buy a Schiele, definitely. I would buy a Klimt.
Yes.
I would buy many lovely things.
It's an interesting segue, actually, to something I'd like to just talk about to finish up. And it's almost this notion of the next generation. And we've alluded to it a little bit, talking about democratized media trends and intergenerational transfers, for example. But we are in a time of great intergenerational transfer from one generation to the other when we talk in terms of extreme wealth. A lot of that is passing into female hands, incidentally. I'd be interested in your view on what that means for the secondary art markets in particular. But also, there's so many emerging trends, things like tokenisation, for example. From the outside, to me, it's not clear how significant that is going to be in terms of the secondary market. Also, if I'm referring again to the episode of Wealth Office we did with Pearl Lamb, we talked a lot about how a lot of Western next gens are inheriting collections and are breaking them up because they don't want the hassle. It's that classic thing. It's just because you like coffee doesn't mean you should own the coffee shop. And so they're selling their collections. By contrast, a lot of Asian emerging wealth are buying up these collections. So there's a lot of shifting dynamics in the market at the moment. Now, it feels like the blue chips are the blue chips and they're what we've talked about. But if you had to look at the dynamics of the secondary art market for the next, let's say, 10 and 20 years, given all these changes across technology, across different dispersion of global wealth, and also the changing preferences of those slightly younger potential collectors, what's your prediction for the secondary art market for the next couple of decades? What's going to stay the same? What is going to change? And for a collector who maybe is watching this, or maybe an aspiring collector, where are the opportunities? Where are the risks?
I foresee that the future of the secondary market is very multipolar. It's not going to be just the East is collecting and the West is selling. I think that is partially the dynamic of what Pearl had touched upon, that Western younger generation has inherited collections from above. And it's natural that if they're not as interested and if they'd like to shift that, value store into a different collection, or, so many auction houses are moving into different sorts of collectibles, different types of art, that it doesn't mean that they're not still going to collect or that collecting is not interesting. They just want it to be interesting to them. And that's the power of, collecting itself, is to be able to express yourself through your choices. And I do think that the future, the younger generation's more interested, and we touched upon this, in having it be more of a dynamic choice, a feeling that they're taking part of a bigger something than just a purchase. And I think that as advisors and in this space, that's something that we want to embrace and be part of. They want it more transparent and technology-based, which doesn't mean that the artwork has to be necessarily technology, but that perhaps it is archived more easily through technology tools, which are, there's so many things on the market now that are coming about to make provenance and authentication and archiving is so important. And those are things that are going to be simplified by the tools that we have at our hands now. And that once that bridge is crossed, collecting is going to be more fun, because a lot of what does become bogging down is the paperwork, the files, the loss of the certificate that was signed 45 years ago that is necessary for building the provenance. So I think we have an exciting time ahead for a secondary market.
Bigna, how about the democratization piece, the tokenization? Let's not talk about NFTs, because I think the NFT world has been and gone, but tokenization, blockchain, I believe there's even some plans afoot for one collector to try and list an entire collection on a stock exchange in the United States. Are these novelties, or are these the future infrastructure of the secondary market?
I think it will become part of the infrastructure. I tokenized a real-life Picasso in Switzerland in 2021.
Which is quite early for tokenization.
So Sporty was the first one, which was a great exercise. From the time being from there until now, I believe fractional ownership is nothing new. That has always happened. If you are 5 brothers, you have a fractional ownership, and you can go about it very complicatedly and has an SPV in the company. And at some point, my idea is that tokenization is basically the cheaper and more effective construct to parcel up into fractional ownership. It will soon not be so exciting, I don't think, whether the next generation needs to understand how it is done or not. There is a difficulty. I find the stock market very interesting, because I think you will always have the trading volume, but not the depth. I think it's very difficult to get people going, but I can't wait. I would love to see this soon. I think it is an element of, actually, it becomes more cultural ownership, because that means you move away. Can you imagine? You're surrounded by many, many lovely paintings here, and it is here, and at the moment I say, oh, I like to own this and store it and for long and value it, it's a different proposition. Just, oh, I'm going to buy part of this, and I'm going to have a say in what is happening with this, together with other people who also own a part in this, and they trade it and they give it on. It's a very kind of nice way of collectively supporting certain initiatives of what happens with something without you actually so much owning it.
It's interesting in many ways that the risk of technology as we move into this AI, this world of omnipresent AI, for example, is overhyped in my opinion, but is very much focused on productivity, efficiency, misses beauty, misses humanity. And in many ways that the world is doing well when we still have lots of art and lots of beauty, despite that omnipresent AI driving us to productivity. And you were talking earlier about the sophisticated collections or collectors being those who make their artworks available for people to see, to enjoy. That's where fractional ownership becomes quite interesting. It's almost ironic, actually, that you're using technologies like blockchain to create participation so people are attached to those artworks. And in many ways, as a form of cultural preservation, financial dynamics aside, it starts to become quite interesting in many ways.
It is it's excellent technology for museums holding, for donorship, for joint donorship. It eases a certain mechanic. So this is what technology should be there for, no?
Catherine, Bina, thank you for joining me.
Thank you so much for
Thank you,
having us.
Michael.